Hello traders, Gary Wagner here. It is about 10:30 in Honolulu, 4:30 in New York City. It is the 6th day of September 2012 on Thursday, and this is the daily report for gold and silver. Another very nice showing in the precious metals markets, coming well off their highs, but there's significance in the numbers today. We currently have cash gold trading roughly at 1702, putting it up about $8 on the day. The high 1715 with a low of 1695. Silver also on a tear today. That's up about 44 cents on the day, about 1.38% higher. Very nice showing. 32.28 the high. The low. 33.11 is the high. And as you can see, our current print is 32.88. Incredible showing in the precious metals markets. Triple digits in the Dow Jones. Tremendous move in the equities markets. Dollar, interestingly, under pressure. First chart of today's show. This is cash market. We absolutely want to look at the cash market as the New York markets have closed for the day. And as you can see, currently trading just above 1700, 1701.23. Now, what I find interesting and worth noting on this chart, let's go ahead and blow that up a little bit, is the fact that on this daily chart, when we take a look at it, we plotted this particular resistance area far in advance of the market finding any kind of resistance here. As you can see, when we take a look at it, it's currently trading 1705 is that number. That number wasn't really pulled out of the air. It's a valid Fibonacci retracement that we have been looking at. And you can see what we're getting in terms of the candle itself. The candle on a daily chart right now is something that's simply called a shooting star. A shooting star, let me go ahead and highlight that for you traders and blow that up a little bit. But a shooting star, that's this candle right in here, is basically the opposite of a hangman or a hammer. And really what you're getting is you're getting the tail above this small real body, whereas within a hammer or hangman, that tail is below the real body of the candle. It can be significant if followed by what's called confirming candles, but we'll show you on the intraday charts. You'll see that what we were talking about yesterday, the fact that you get in a market that's running up periods of acceleration, periods of consolidation, what I like to call forming a base before it goes to the next area. And here's what I'm talking about. I'll expand the chart in a little bit, but this is a 60-minute, it's in Henkin candle format, and it is of the cash market of gold. And we talked a little bit about this yesterday because the question was, you have these periods of consolidation, really base forming right before you get an ascent. Following that new price high that you get, you'll get a period of consolidation again, and that's typically followed, as we see, by another spurt to the upside. And that's how the market itself will really kind of stair step to move to higher ground, something like that. Now, when we blow this chart up, expand it, and let me go ahead and do that, you're going to see that as we do that, there's a couple of things that become noteworthy and allow us to follow times when it's trending and times when it's consolidating. As you can see right now, currently trading at 1700, under a little bit of pressure after hitting that high. I believe the high 1715 right in that area. This is 1715 right here. But what you'll notice on this market is really distinct periods. On the short-term charts, it's pretty easy to identify. Periods of consolidation. Of course, you've got a range in there. And here your range, you've got the upper level right here touching at around 1700. It's absolutely resistance. Market comes down and finds support. Where's support? Right around 1685, just above that. You'll get these alternating candle sizes and alternating candle color. That's the key. Because when you look at periods of true ascent in the market, when the market is really trending higher or trading lower, you'll see that the market is really characterized by the Henkin candles growing in size, indicating that the strength of the trend is growing. And as it gets to a point of resistance, you'll see the body sizes of these Henkin candles begin to really contract, and then you'll go into these alternating patterns. And the alternating color of that is going to be indicative really of a market that is forming that base. Now, what I find that is most noteworthy is that we talked about a month ago when I had a seminar on support and resistance areas. And this example really can illustrate that better than most examples I've seen. And what I mean by that is as follows. This is 1700. 1700 has absolutely been an area of resistance as the market moved up. You can see it touched it in this area. We'll go to a longer term intraday chart and you'll see it wasn't the first time the market had tested this area. Absolutely. This is a ceiling. There is resistance there. When it comes up, it cannot go higher and then it will move back down, no doubt. However, once the market breaks above that ceiling, that cap, that resistance area, in a market that's truly ascending, truly moving up, what was formerly resistance will now become support. So, I mean, if it trades at 1699, 1698 in that area, but that manages to close above or around, we're absolutely seeing the market form a base in this area. Currently looking at our most active silver contract. This is the cash market. I apologize. Current print is 3260. So we were at 3288. I mean 68, not 88. One thing that you can see, we've been looking for a logical area where we might find some resistance. And the area that I've really pegged is about 3345. We came just shy of that. Market, of course, is consolidating. It's giving back a little bit of the profits, but it's had a tremendous showing, almost 1.5% to the upside. And in terms of finding resistance in the market, I still believe silver's got a little bit further to go before the first real area that I would consider to be a candidate for some resistance. You know, when these markets run, they run aggressively and they run pretty tough. Let me go ahead and blow that up for us. You can see we are trading right now. We've had this one candle. This is 420 minutes straight candlestick. And this low that it formed had a low below this support level, which is 3242. My personal sentiment right now is that support level should hold right in here, 3242, as we see the market moving up ever so slightly above it. But the key here is that as this candle form, it is well off of the low, because realize that on these candlesticks themselves, this is our low of that time cycle being 420 minutes. We're well off of the lows, and we are now trading above what I consider to be an area that we want to watch for interim term, just a short-term basis. I think this market is headed higher, much higher, but it's going to go through a period of ascent and a period of contraction or corrective nature, a counter wave against these impulse waves moving up. Tremendous day in the market for us. Again, Gary Wagner wishing you, as always, good trading. Talk to you tomorrow for the weekly wrap-up on Friday. Have a great day, traders. Bye-bye.